The Dormant Pledge, when 1 million bitcoins move. For over a decade, the blockchain world has lived with a ghost, the untouched hoard of early coins mined by Bitcoin's creator. These coins, resting quietly in the digital vaults of time, carried both mystique and weight. Markets assumed they were gone forever, an eternal monument to scarcity. But what if they were not gone? What if the original steward decided to fulfill a pledge, to use them in service of building a system that could serve a billion people, not merely enrich a handful of speculators? Phase 1, The Awakening. The shock began the moment a few dormant addresses stirred. A single proof of movement was enough to rattle the world. Satoshi's coins were alive. Within hours, Bitcoin's BTC price fell 20%, crashing from $60,000 to under $50,000 as panic spread. In contrast, Bitcoin SV, BSV, the proclaimed original protocol, skyrocketed from $60 to nearly $300. Markets realized this was not a random transfer. A program had been announced. BTC could be converted to BSV at a 1-to-1 ratio, through a legal entity requiring KYC, built to operate transparently. Phase 2, The Floodgates Open. As the first waves of conversions flowed, the impact became undeniable. BTC slipped below $40,000 under sustained sell pressure, while BSV broke four figures, passing $1,000 on sheer imbalance of liquidity. This was not speculation. It was migration. Coins that had long symbolized BTC's untouchable scarcity were being redeployed into a network designed for utility, scale, and global use. Phase 3, The Market Reckoning. Within 6 months, as hundreds of thousands of coins moved, BTC's narrative collapsed. No longer could it claim to be immutable, digital gold, when its very foundation was shaken by its own Genesis stash. Its price plunged toward $20,000, with faith leaking out of its walls. BSV, in contrast, became the story of rebirth. From ridicule to relevance, it soared past $3,000. More importantly, developers, entrepreneurs, and nations began to take it seriously. The system once dismissed as a footnote now looked like a contender for the future of money. Phase 4, The Struggle for Legitimacy. Regulators circled, asking whether the swap program resembled an unlicensed exchange or investment scheme. Exchanges hostile to BSV pulled listings, amplifying the perception of censorship. Yet the transparent structure, a regulated entity, with KYC and auditable records, held its ground. Media narratives split the world. One side cried fraud, the other pointed to mathematical truth. Ownership was proven in cryptographic stone. Phase 5, The New Standard. Over years, the dust settled. BTC shrank, stabilizing under $10,000, still useful to speculators but irrelevant to the broader economy. BSV matured into a top-tier global asset, trading between $5,000 and $10,000. Its value was not in hoarding but in usage, micropayments, data anchoring, public ledgers, and commerce at planetary scale. The Dormant Pledge was fulfilled, not by giving away wealth, but by redeploying it to ignite a system that could include all of humanity. In this vision, money ceased to be a mere store of value for elites. It became a utility, a tool, and a bridge into fairer participation in global trade. The billion people once excluded from the old financial order were no longer waiting for permission. They were transacting, building, and recording their lives on-chain. The pledge was not charity. It was infrastructure. And it began the day 1 million dormant bitcoins finally moved.